Okay, good morning everybody, good afternoon rather. We had some technical hiccups and so weren't able to record this webinar at the scheduled time, but I'm, as I said, recording it and so will be available now on YouTube, and that's where you'll be watching it right now. So apologies that we weren't there at 12:30 GMT today, but those technical problems look like they've been resolved now, so we'll be alright for next week, and indeed for the non-farm payrolls webinar that we're having on Friday. So moving swiftly on. So this is the sort of general summary of things that I'm looking at. So we'll quickly, we'll cross back, refer to this this table here, but let's start with euro dollar. So here's the euro dollar chart here. So this is how I'm viewing things, is that we were in that correction phase, but we've broken back above it. We hit the 118.50 level, pull back to the trend line, we've rallied up. We've hit basically just shy of the 120 level, pull back to this 118.50, which was resistance. Now it's generally support, and the expectation being that actually this 18.50 should be support, helping another run up to the actual 120 level and potentially above. 120, I would say, is the resistance number. It's a big round number that everyone's paying attention to. Still, all the trend stats here to me suggest that we're going to push through it. Should 118.50 fail, however, then it probably implies another drop down to the 117 mark. But I think while we're above that 117, or more specifically just the low in here, which is probably 117.20, about that, then I think this this daily uptrend's intact. Of course, we're above that 20-day moving average, we're above the 50 level, and on a weekly basis, you know, we've seen 3 strong weeks of gains. Obviously, had a little pullback last week, but to me, it doesn't look like anything too serious. No real signs of reversal at this point. So again, above the 50 level, generally an uptrend scenario, and back above that 20-week moving average as well. So also finding support down here at this old range, these old range highs. So all fairly supportive of a move higher in markets, I believe. Let's switch gears to the pound. We're already on the weekly chart here. You can see this rising trend line that we've had on here for a good number of weeks now, still very much intact, and has worked pretty nicely, pretty textbook in fact, and we're up challenging the highs. It looks like we're about to challenge the 136 level. As of today, we're up above 135 on a bit of Brexit news. So here we go. Here's the 133, I think, is the key support. We're quite a fair bit away from there now, but we've had a couple of weeks of decent gains. 136 is that potential area for a double top. We did have quite a decent pullback here. So we didn't find support at the old high, but we kind of did eventually find support down at these highs from the previous swing. So still quite a strong uptrend, but as I say, that it was quite a decent pullback here, obviously bigger than these, and so that's where the risk of a double top comes in up here at 136. But no need to get ahead of ourselves. For me, at the moment, it looks like the uptrend is doing okay and set to continue. If you're wondering where that 136 came in as a resistance, it's really from all these old monthly lows back over here, down at the down from the 2009 financial crisis, really. And so, should we get through 136, I think 138 is next on the cards, because that's just that little swing low through here. Oh, I said 138. It's in fact more like 139. Is that those lows in there. Switching gears to dollar yen, still very much in this trading range, 114.50 is held, but we've had it's not within the scope of a trend, so it's not exactly a bullish engulfing candlestick, but I think it's quite a strong bullish indication of where market wants to go. 111 held nicely, and so I would imagine that we hold somewhere within that bullish candlestick last week, and that 111 holds. So we're really just looking for a value area to take advantage of a move up towards the top of the range at 114.50, and it does look like an eventual break of 114.50, but we obviously haven't got there yet. We're still in the range bound scenario for now. You can see how the momentum picked up here on the passing of the US tax bill. Obviously, we gapped up through that 20-week moving average, sorry, 20-day moving average, and back above the 50 level on the RSI. So if those two levels can hold, maybe we go back, fill the bottom of the gap here down towards a 112 level. That potentially be a value area that holds, and this move higher can resume. Let's jump over to the indices. We're having a tough time in the FTSE 100 getting through that 7600 level. This is the weekly candlestick chart. Let's have a look. Here you can see we've got quite a wide range already. 7300, I would argue, is quite solid support, and 7200 below that, and 7600 is that big number. We've got a weekly bearish engulfing pattern, which doesn't look too healthy, taking us below the 20-week moving average, but I think it's in the middle of a range-bound scenario with the moving average completely flat, so I'm not reading too much into that. For the moment, not too much evidence that that's what 7200 level will give way, but you can see that momentum is rolling over a bit, while price is still at the moment, at least, generally holding higher. So we'll have to look for some more key bullish impetus to get us with a mindset to a breakout here. At the moment, still very much in that range trade scenario. Very much a different situation over on Wall Street, just a roaring uptrend here. We're about to take out the 24,500 mark, it looks like, for the first time. If we do go back and fill that gap from the weekend, then 24,300 would be a potential pullback area. I mean, we're looking very overbought here, but we have been for quite a while, obviously. So, you know, if we do take through 74,300, then maybe we pull back down, all the way down. It would be surprising if we got all the way back down to the old resistance area here, which is more like the 23,600 and change. But 23,700, 23,800, those round numbers could be attractive on the way down. Switching gears to the Germany 30. So again, this is the weekly chart. It looks like 12,900 is finding a fair bit of demand. I mean, that's what I've said here on the we're waiting for this correction to end, but there has been a fair bit of buying interest in and around the bottom of that 12,900 level. We'll have a look at those daily wicks up in a minute. If I pull that daily chart up now, you can see that we're still below the 20-period moving average, still kind of chopping around that 50 mark, so not quite having finished this correction yet, so still a risk of more downside, but it just looks like, judging on these daily candlesticks here, that obviously there have been attempts to send the market lower, but so far it's been bought up. So we could be absorbing the demand, ready for a flush lower, and if we do take out this 7,900, I would expect it to be a fairly sudden drop, because we've tried to buy it up and it's failed so far. But given the overall context on a weekly basis of the uptrend, the bias would be that we get a break through the 13,200 mark, and probably a safer approach in this scenario. Not safer, but just a better way might be just to wait for confirmation that we're breaking back into that uptrend with a move through 13,200. Moving over to commodity space, this rising trend line in gold with support basically in at the 1270 level is pretty key. So 1265 has been the support for a while now, but I would say probably the more dynamic support is coming in at around 1270. And if we do get a daily close through there, it's not game over necessarily, but it's going to be close. I do suspect that probably we had a big downdraft. We tried to buy it up, but really this is just a corrective phase, and we can need another leg lower to attract some more buyers into gold. Obviously, you know, I would say the market is holding up pretty well, given that we're rallying so hard in equities. You'd expect gold to be a lot weaker. So if we do eventually get a pullback in equities, that might be the opportunity for gold to rally a bit. But we're not quite there yet, and it looks like a downside break on the scenario, on the cards, but we haven't quite got it yet. You know, neutral at the moment, and I suspect it's about to turn bearish. and just to confirm those numbers there with the 1265 and the 1300, and again that rising trend line is the key here. Bit more of a straightforward market in Brent crude. It's chopping around a bit at the moment, but still generally quite a neat looking uptrend. And you know, even though we've kind of chopped around a bit here, there's no real evidence that the uptrend is ending at this point. And you know, just on a weekly basis, you can see that there's a few long wicks coming in at that 61 level. Obviously, not been quite able to take out that that level in here, which is basically the 63.50 level, has been a kind of bit of a stumbling block, and then obviously the 65 just above it. So we could get a little false break up through to 65 and then roll over from there. That is possible, given that we are in quite an overbought territory around 70. You know, fundamental backdrop to that might be that the market's looking a bit overstretched, and OPEC just kind of gave what was expected in terms of their 9-month supply extension. All right, so quite short and snappy today. Again, apologies for it not being at the properly scheduled time. But thanks very much for watching, and good luck trading this week. Jasper signing out.